We're now seeing the investors bail on Florida's housing market. Home prices in this neighborhood, they're about to collapse because one thing we're seeing is a huge increase in inventory. The number of homes for sale has just skyrocketed across many cities and neighborhoods in Florida, and this is the prelude to big price declines. And these investors, they know this. They see the writing on the wall and they're getting out right now with data from Redfin showing that investor purchases have crashed all across Florida. If we look at Jacksonville, if we look at Tampa, if we look at Orlando, the investor purchases are way down by as much as 50% to their lowest levels in 5, 6, even 7 years. And you can see what happened during the last downturn. It was the investors that stopped buying in 05, 06, right before the prices crashed. So what you guys got to remember is that this is one of the most crash-prone housing markets in America. In the last downturn, home prices in Florida went down by 50%. And in areas like where I am right now in Southwest Florida, they went down by as much as 60%. And this area I'm in right now in Cape Coral is ground zero for investors abandoning the market. Because when we look at data on the number of homes for sale in this zip code in Cape Coral, take a look at this, everyone. We're up to 490 homes for sale in this zip code. That's more than triple the low that occurred in 2021 during the pandemic, and it's the highest level on record, at least going back 7 years. But what's crazy, everyone, is that the locals here, especially the sellers, it's almost like they're not catching on to what's going on. Because when I go on Zillow and I look at the current homes that are listed, I see that they're still way overpriced. Like just down the street over there, there's a D.R. Horton built home. It was built in, I think, 2020 or 2021. The owner bought it for $270, and they're listing it now for $450. They're still trying to increase the price by 80%. They've done a couple price cuts, but it's almost like a lot of these people in Florida and many other parts of the U.S. housing market, they don't realize that we're not in the pandemic anymore.
But over the last couple weeks, everyone, sellers have started to actually realize that the market's in a downturn, particularly in Florida. That listing that I just showed you, well, since I was down there in Cape Coral, the seller has cut the price another 12% from $455,000 down to $400,000. So it's been an 18% price cut overall for that listing. In addition, they're trying to rent it at the same time that they're trying to sell it, and they're having to cut the rent as well. Moreover, since I filmed that video, the inventory has increased by another 20% in that zip code. So something big is going down right now in Florida. And one way that I know this to be true, beyond looking at listings on Zillow and beyond looking at inventory, is by looking at the rental market. The rental market in a lot of areas in Florida and the rest of America is in a steep downturn right now. For instance, if we move a little north of Cape Coral up to Northport, Sarasota, you can see that data from Apartment List shows that the asking rents for apartments has plummeted over the last year and a half. You can see the rents surged during the pandemic and they peaked in February 2022 at over $2,000 a month. You can see that rent is now down to $1,800 a month, which is still above where it was before the pandemic, but that's down 10% from peak. And you can see it's just in a free fall. The rent in Sarasota is likely to continue to drop. And so if the rents are dropping, that's your dead giveaway as a home buyer investor that there's something wrong in the market and that prices will go down. Because what the rent decline is telling you in real time is that there's deflationary forces taking over that housing market. And if deflationary forces are there, prices are going to drop more in the future, especially because many Florida homeowners can no longer afford to own their homes. Over the last 1 to 2 years, the insurance has gone way up. The cost of homeowners insurance, the property taxes in Florida have gone way up. The HOA fees have gone way up. And now many homeowners who have lived there for a long time or have owned a second home for a long time, they're being forced to sell because they can no longer afford it.
And I've heard some stories about the cost of homeownership doubling for some Florida homeowners over the last couple of years. In fact, we had the property tax appraiser for Osceola County, which is to the south of Orlando. They just came out and said, expect your property tax bills to double if you're a homeowner in Osceola County who doesn't have homestead exemption. I mean, how can Florida homeowners afford and sustain this, especially with such a high percentage of the homeowners being retired and on fixed income, and especially with so many homes being second and third homes that aren't protected by homestead exemption? I mean, this is a cocktail that could cause a perpetual wave of forced selling into Florida's housing market for the foreseeable future. Now, of course, there's a lot of positives to buying a house or investment property in Florida. It's one of the highest growth states in America. The long-term appreciation in Florida's housing market over 20 or 30 years is very good. good. So if you do buy in Florida, you're probably going to have good returns over the long run if you're someone who has a multi-decade investment time frame. But what concerns me about someone buying in the market today in 2023 is you're literally buying into Florida at the most overvalued its housing market has ever been. And the way that I measure overvaluation is by comparing the home values in an area to the incomes. It's a very simple formula called the home value to income ratio. And right now, the home value to income ratio in Florida is at the highest level on record, even higher than it was in 06 at the peak of the previous bubble. And you see what happened after 06. That value to income ratio collapsed. Actually, Florida's housing market became undervalued starting in 2010, 2011, 2012. And then it was fairly valued by the mid 2010s. So if you bought in Florida in 2017, 2018, 2019, even 2020, you bought in a market that was fairly valued. But anyone that's been buying over the last couple of years, you've been buying into a market that's heavily overvalued and has huge risk of price decline. Because ultimately it's incomes which dictate where the housing market goes in the future. And for a little while, Florida had an uptick in incomes during the pandemic due to remote work and the lockdowns in certain states and all the money that was printed. That all came at the direct benefit of Florida. But now a lot of these things are going into reverse. I mean, we're seeing lots of companies call people back into the office. In fact, Redfin just came out with a report saying that 10% of the new listings right now are people who are getting called back into the office and have to sell their homes. So if this is a trend that continues, especially in combination with layoffs, how is Florida's housing market going to handle that? At the same time, we also are seeing a big drop off in demand to buy second and third vacation homes. This was again a report from Redfin. They're measuring the percentage of mortgage rate lock for second and third homes. We've seen an absolute crash in second and third home demand, down to the lowest levels almost in the last decade. So these fundamental pillars of Florida's housing demand, people doing remote work, people buying second homes, they're getting cut out at the knees, which is going to leave ultimately the local in Florida, the person who's been living in Florida for multiple years. It's going to leave them to support the housing market. And, for instance, buy this house, which is on the market here in Cape Coral for $450,000. I told you about this a little earlier. This is the D.R. Horton home that the owner bought in 2021 for around $270, trying to sell it for $450. And you can see there's so little interest. It only has a couple saves on Zillow over the last 30 days because the locals here, they don't have the money to buy a home like that for $450,000. I mean, the payment is going to be almost $3,000 a month or $36,000 a year, given where mortgage rates are at today. And that's one of the reasons why in this zip code in Cape Coral, the inventory is absolutely exploded. The price cuts are way up. And it's not just here in Cape Coral where that's happening, everyone. I was just in Miami a couple days ago, and while Miami is a market that's still going up, there's certain pockets of Miami which are now definitely in a downturn, particularly some of the investor-driven areas in central Miami, or neighborhoods like Wynwood and Buena Vista. The inventory in those neighborhoods has skyrocketed. Some of those neighborhoods had 50 to 60% of the homes being purchased by an investor in 2022. And so if you have 50 to 60% of the homes being purchased by an investor during the peak of the bubble, well, then who's going to buy those homes once the investors stop buying? It's almost like a Ponzi scheme, almost. The investor buys it and then tries to sell it to another investor who then tries to sell it to another investor. It's a game of hot potato. And now we're seeing, those last investors who bought, they're the ones holding the bag. And where do I think prices will go down in Florida the most? This is an interesting question. I think a lot of you have this question because a lot of you are buyers in Florida here on my channel. I see you in the comment section, and I see a lot of you complaining about how the prices are just still so high. And it's true. I mean, the prices in Florida have gone absolutely nuts the last 3 years. And I think a lot of you know intuitively that the Florida housing market is overvalued, but you are kind of frustrated by the lack of progress and seeing the prices go down by more because they're only down by a little bit in some parts of Florida. They're down by 3% around Tampa. They're down by maybe 4% in Cape Coral, but it's, 3-4% declines in the areas that have gotten hit over the last year, whereas prices are still up 5% in the Miami metro area. So what are going to be the cities where the prices drop the most? Well, I'm going to consult overvaluation to figure that out. I'm going to look at the cities where the values have gone up way more than the incomes. Because when the values go up way more than the incomes, that's the telltale sign of a bubble. Over 100 years of U.S. housing market history, it's been home prices versus incomes, which tell you kind of whether the market's fairly valued or not. And it's the cities in Florida where, the prices have detached most from income fundamentals. They include places like where I am here in Cape Coral, in Naples, in Punta Gorda. A lot of places in Southwest Florida have a lot of overvaluation. These are places that got crushed in the last downturn. Like I said earlier, prices went down by as much as 60% in zip codes like this in the last crash. I don't think they're going to go down 60% again, but could they go down 20, 25, 30% over the next couple of years? Well, yeah, that could definitely be a possibility. Additionally, I think Miami is very overvalued, and this is kind of a controversial take that I have, is lots of people are now buying into Miami as this kind of like rejuvenated city that's completely different than it used to be, and where prices are just gonna have to keep going up forever in Miami because that's just the way it is. Everyone wants to move there. But again, you just look at the data in Miami and you say to yourself, well, the median household income is less than $70,000 in the Miami metro. It's even lower in Miami-Dade County. I mean, there's a lot of people in the Miami metro who are really struggling in terms of being able to afford their mortgage payments, in terms of being able to afford their rent. The rent to income ratio in Miami is 50%, meaning that the typical household has to spend 50% of their gross income on rent. I mean, that's the least affordable in America. And it says to me that Miami is going to have a pretty big downturn, because when the unemployment rate there starts to go up, which it always does, everyone. Right now, the unemployment rate is 2.3%. We could see it was 2.3% in 06 at the peak of the last bubble. Then it went to 11%. We can see in the 90s in Miami, the unemployment rate went to almost 10%. This is an economy that tends to get hit very hard in recessions. And so when that happens, I think we're gonna see prices and rents in Miami go down by quite a bit. Additionally, another market that I think is very overvalued is Jacksonville. Jacksonville is a place that, again, has a history of really getting hit hard in recessions and housing downturns. It's a place that the investors initially piled into during the pandemic. You can see the investor purchases in Jacksonville skyrocketed, and now the investor purchases have plummeted, and now we're seeing inventory go up, and we're seeing a lot of warning signs out of Jacksonville's housing market. The rents there are starting to go down. It's an area that there's a lot of economic risk. Be careful if you're a buyer there. Additionally, we're now starting to see some distress show up on the Panhandle in Florida, and this is an interesting market, the Panhandle, because it's not as overvalued as some of the other cities in Florida, like areas like Pensacola and Destin and Panama City. However, we're seeing distress in those markets show up in terms of lower rental rates right now. We're seeing that those are the areas in America where the rents are going down the most for apartments, which is signaling like fewer people are going there. If the rents are going down, right, that signals fewer people are there, they're going there, the investors are starting to have issues. So don't be surprised if there's some distress in the Panhandle that might show up sooner than you think. And ultimately, my mission here, folks, is to make sure that you guys have the data so you can make the best and most informed decision possible about where and when to buy a house. That is my mission, because the thing that gets me annoyed the most is when I see people making huge financial decisions. I mean, buying a house or investment property will be the biggest financial decision most of you make, and most people do it without knowing the numbers. Like in this zip code where the inventory is just skyrocketed, if you're a buyer or seller, you have to know that, right? If you're a seller and you look at that data, you're probably going to be more cautious about what you price your home at. You're probably going to come in at a more reasonable price. Whereas if you're a buyer and you know the inventory is way up in your zip code, you're going to have more confidence that you could wait it out for a better price. But I don't want to be too negative on Florida, everyone. I think in the long term, Florida is an okay place to buy. It has very good migration figures. It has very good growth figures. You cannot argue with that. It's a business-friendly state. The taxes here are lower than other states. So those are some definite positives that Florida's housing market has going for it. Rather, it's more about the timing, about when you buy in Florida. So if you buy at the wrong time in Florida, like historically, you could see there's people who lost everything. And what I would encourage you guys to do, if you're a home buyer in Florida or another part of America, and you want to make a more informed decision about where and when to buy a house or investment property, check out the data on Reventure app. www.reventure.app. Specifically, I would look at data on inventory, days on the market, and price cuts in your city and your zip code. Those metrics are going to give you a good idea about where your market is now and where it's going to be going in the future in terms of prices. So go there, check it out, create a free account, www.reventure.app.